Well, investors are becoming worried about market drops and may think of using stop-loss orders, which they think will protect them from market losses. Joining us to talk more about what stop orders are and if they can save you from market declines is Brent Wilsey of Wilsey Asset Management. Brent, good morning.
Good morning. How you doing?
I'm doing great. What's a stop order? I guess that's where we should start.
Well, that's where we can start. Again, I got to say investors are so worried. I mean, you got the high debt levels for the government. You got all the spending going on, increasing interest rates. People getting nervous, and they come up with these ideas. And actually on our radio show, this is one that we get the most of. What can I use? Stop loss orders. And there's 3 different types. And I want to explain to people because they only get about half the information. I think even you are saying, well, what are these things? And the problem is people start using them, not understanding what they are. So let me try to explain this to people. And also, by the way, it's not just stocks. They can be used on ETF, the exchange traded funds, which are very popular. So I want people to understand them before they think it's a great idea and they use them and get burned on them. So there's 3 different types. First is just a stop loss order. I'll give you an example. You buy a stock at 100, you put a stop at 90. Well, it goes down to 90, you are stopped out. But you've got to be careful here with this, Jason, because what could happen is that's at 90. If the next day the stock goes down to 85 and opens at that price, you're sold out at 85, not 90. Keep in mind it's an auction market, not things that go down each time by little amounts. So you may not get your price that you want because it's based on the next price that's traded there, just a normal stop loss order. But if you want to kind of prevent that, Jason, you can do a stop limit order. This is where you buy a stock, say at 100, and then that goes down to 90, you'll get that 90, but only 90. So the same scenario, the stock opened at 85, you're not going to be sold out because you said, I want 90 only. So there's ways around that to overcome getting that, but you may not ever get out. The stock could go from 85 to 80, 75, you may never get out with a stop limit order.
Okay, so with a stop order, to use your example, you buy a stock at 90, you put or at 100, you put a stop order in at 90, and basically, depending on which one you do, as soon as that stock hits 90, the computer basically says sell.
Exactly. But keep in mind, if the next order is not 90, but the next order is 85, you'll get 85 unless you put the limit order on it. And this is why I tell people, don't think these things are simple. You can really get caught on them. And then also, too, some firms have what's called a trailing loss order. Now, this is where you can set it at a certain dollar amount or percent. And let me give you an example here. We use the same thing. You buy a stock at 100, you put a stop loss order of 5% on that. That would mean that, okay, you'd get it at 95 be your stop order. Say the stock goes up to 110. Well, then what happens, your stop price automatically rises to 104.50, so therefore that'd be your new price. But the previous limits still apply. That again, if it's not a limit order, you may get less than that. You get the limit order, you may not get out at all. It gets very confusing. So the thing that concerns me is people think these are so easy, I'll just use stop loss orders, and they don't understand how they work, unfortunately.
It sounds like there's a lot of moving parts. I mean, if I put a stop order in at 90, I'd expect it to sell at 90, but it could be down to 85.
Mm-hmm. Yep.
And I could, okay.
Yep. And also what happens here too is that, so then I've seen this happen as well, where the order's in, stock goes from 100 down to 90 in one day, and then that same day the stock goes back to 101. Oh shoot, now I've locked in my loss. Now what do I do? Now the stock goes to 101, 105. What do I buy? It gets very confusing. At our investment firm, we do not use loss orders, stop loss orders, because we are investors. This is really a trading tool for traders, but I've seen so many people lose money doing this, and it sounds good. It's one of those things that sounds good, but in theory, it doesn't work that good for an investor.
Okay. How about seminars coming up? There's so much to learn, obviously.
Actually, we're not doing a seminar this month. We're taking a little time off. We've been so busy, so we're not doing seminars. But what people can do is go to our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. There's a lot of great information there. Also, too, I did want to mention also, too, about to warn people, don't use market orders or limit orders last for 60 days. I want to get that out to people, too, so they understand how those work.
Okay, good to know. Brent Wilsey, Wilsey Asset Management. Thanks, Brent.
You're welcome.
All right, we'll be right back with